Hi trader, welcome and happy new year. This is the first video of the Forex market in 2017, the new trading year. First of all though, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence and contact an appropriate entity for more details on that. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. So the big question, how will the dollar start the 2017 trading year? At this moment, when looking at the euro dollar weekly chart, we see that price has broken below these bottoms here at 105 and 104.50. Price kind of trying to poke through it, but not sustainably here, because you see a bit of a bounce at the Keltner, Admiral Keltner indicator, showing support and price not really breaking through it. We had a strong candle here and a strong push below that of a few hundred pips, but now in the second attempt, price is not really having a lot of momentum here. And you see a bit of a retracement as price bounces off that Keltner. Now, I think that price will stay in a downtrend. I think that this resistance, the midway point and the moving average resistance here, will be a turning spot. This top here, these bottoms in here, I think therefore 108, 107.50, 108.50 will be a spot where price will not break through, or there's a low chance it will, and a turnaround will occur for a continuation of the downtrend at that spot. Now it could be a bit lower too, of course. I'm not sure there. If of course price breaks through these bottoms of these weekly bottoms here, there could be an immediate breakthrough too, and price should fall down to 102.50. And then parity, those would be obviously the round kind of quarter levels and targets to think about. From a daily perspective, you see a bit of the retracement right here already. You see that there is a bit of a wick here as well. So will that retracement go that deep? And that's something I'm not sure about, because I'm just saying that this is the last retracement I expect, but it doesn't have to necessarily go that far. That's something I will see this week, how far it can go. For me, the key levels to keep an eye on are the S1 and basically the pivot point here. Now, if price bounces at the S1, there could still be one more push up to the R2, for instance, and the R3. Those are the retracements I would expect. Price could maybe make something like this, right, and then go up and then turn again at these R2 and R3s or R1s. Those would be the targets and the turning spots. But if price breaks below the S1 and below this kind of these tops that were broken, the supply and demand zone right here, and of course the pivot point and the moving average, yeah, it is a bouncing spot. But if price doesn't significantly bounce with the strong 4-hour candle in this zone, but rather goes sideways and continues lower below the S1, there could be a breakout down to S2, and then below S2 down to S3, and down the trend continues. So that's what I'm keeping an eye on. These pivot points, also part of Admiral Markets MetaTrader 4 Supreme Edition, so you can add this indicator easily once you have the package installed, and that you can do with easy 2-button clicks, so no problem there. And those are the key levels here, these pivot points, in my opinion, very important for price to either bounce back to resistance and turn, or break below the pivot points and continue with the downtrend. All right, so we're going to continue with the dollar, yen, pound, USD, and Aussie as well. First of all, though, we have, of course, 2017 webinars scheduled in January. Please check out admiralmarkets.com. Go to education and webinars. This week specifically, we have weekly recap, price action patterns, price action trading school, and above all, forecast for the 2017 trading year on Thursday. So hope to see you in the upcoming webinars. Looking forward to having you there. All right, moving on to the cable, pound USD 4-hour chart. Price respecting the pivot point, making a retracement to the upside within this strong downtrend, as you can see. But price eventually broke above the resistance and is expanding the bullish retracement, as you can see. I'm expecting that to continue. I do think that the pound USD can make a stronger or longer consolidation zone and go sideways like this, for instance. This is the primary pattern that I'm expecting. So even if price breaks through the pivot point, I think that it could bounce at the S1 and continue to build kind of like a triangle, for instance, like this, or a flag pattern with slight higher highs and slight higher lows, and then price could turn at the R2, for instance, eventually for a downtrend continuation. I would basically consider this to be a downtrend again if price breaks below the S1 here. In that case, the inverted head and shoulders is not an issue to be concerned of. Price would then continue with the downtrend, I think, and price could fall down to the S2 and perhaps down to the S3 after that. If price bounces at the S1, and I basically will explain on Tuesday what kind of patterns I look for confirmations like a bounce and a break using candlestick patterns basically to understand which one of the two is more likely. If there is a bounce, then I think that R2 eventually, but a choppy move up will happen, and then a turn at R2 for downtrend continuation. All right, so I'm expecting some kind of consolidation on the pound. Now the dollar yen is a bit different. I think that the dollar yen is actually ready to continue with the uptrend. So from that perspective, I think it's more interesting. Strong uptrend, of course, needless to say. On this weekly chart, you see strong weekly candles definitely getting here the attention. And now having 2 weeks of a pause does not really mean much. I think it's just a consolidation, just a bit of a correction here, as you can see on the daily chart. And the 4-hour chart basically showing a flag pattern. And as it breaks that flag or breaks above this top, I think there's space to continue with the trend to the upside. First to test the top, 118.65, then the minus 272 target near 120. The entries I'm looking for basically is 4-hour candle. Well, one of the entries could have been here as the price basically made a retracement for wave 1, 2, but that's behind us for the moment. I think looking at a daily candle, for instance, that is close above this Keltner, for instance, with a close near the high, strong candle today, that could be a good breakout signal on the daily chart. On a 4-hour chart, perhaps tomorrow as it breaks, pull back, makes a small flag on the hourly chart, for instance, like this, and breaks and continues, that could be another way of tackling it. That's something we'll discuss tomorrow in the live trading webinar on Tuesday. All right, last but not least, the AURUSD breaking 2 support trend lines here, this big triangle, then a mini pullback here after the break, pullback and continuation. So strong trend at this moment. 4-hour chart showing another break, smaller break here. This was a bigger correction. This is a smaller correction here. This is basically the small daily correction you see here on the 4-hour chart, right? Now at this moment, I think it's a bit late. The break already happened, and price is accelerating away from that zone. So I think it's not a good point at this time. I think tomorrow may be a bit different. If tomorrow shows kind of a bear flag like this, and it breaks that bear flag, then that could be an interesting intraday continuation. But this is a downtrend, and I don't think at this moment it's the good spot. Or if there's a retracement back to S1, maybe the pivot, I doubt it gets there. Those could be good pullbacks for continuation. I would like price to break below this bottom first, something like this, and then find that continuation. Either this pullback or, as I said, the bear flag, and price should continue. This is bearishly set up. There's bearish trend, and it's a good chance that price will continue at least a bit lower to retest the bottoms a bit further back down here at 70 and about 68.30. All right, 70 of course important as well because it's a psychological round level. Please visit admiralmarkets.com for more analytics, more information, more webinars, and of course you can check out Admiral Markets also through these channels. Wish you all great trading, a great year, and see y'all soon. Cheers.